Hi there. On Sunday, October 6th, I ran a marathon. It was my first race since the lifting of the COVID-19 lockdowns worldwide. In the week leading up to race day and on race day, I was unfortunately unable to prepare last week's episode. For that, I would like to sincerely apologize. Now, on to today's episode. Today I want to discuss the highlights of the Bank for International Settlements, BIS, Triennial Central Bank Survey. I believe this discussion will form a useful accompaniment to the discussion on foreign exchange risks and hedging, which is part of the series on international currency markets. It will also be a useful introduction to our next discussion in the series, reserve currencies and dollar dominance. I have decided to swap things around and start with reserve currencies before discussing currency areas. Before I continue, however, do visit our website where I curate news and publications from international financial organizations and world central banks. Topics cover a wide range of financial and economic issues that affect individual countries or the world economy. For instance, COVID-19, inflation, or the war in Ukraine. Please also subscribe to this channel and be informed whenever we publish a new video. The BIS Triennial Central Bank Survey is the most comprehensive source of information on the size and structure of global over-the-counter markets in foreign exchange and interest rate derivatives. Activity in foreign exchange markets has been surveyed every 3 years since 1986, and in over-the-counter interest rate derivatives markets since 1995. The triennial survey is coordinated by the BIS under the auspices of the Markets Committee, that is for the foreign exchange part, and the Committee on the Global Financial System, that is for the interest rate derivatives part. It has been supported through the Data Gaps Initiative endorsed by the G20. What are the highlights from the 2022 Triennial Survey of turnover in over-the-counter foreign exchange markets? 1. Trading in over-the-counter foreign exchange markets reached $7.5 trillion per day in April 2022, up 14% from $6.6 trillion 3 years earlier. 2. Turnover by instrument. Trading in spot and foreign exchange swaps continue to account for the bulk of foreign exchange turnover. At $2.1 trillion per day in April 2022, turnover in foreign exchange spot markets accounted for 28% of global turnover, that is all instruments, a slightly lower share compared with 2019. For their part, foreign exchange swaps, which are typically short maturity instruments, that is up to 7 days, used by market participants to manage funding liquidity and hedge currency risk, remained the most traded instrument, with turnover of $3.8 trillion per day. Their share in global turnover increased to 51% from 49% in 2019 and 47% in 2016. The share of trading in outright forwards remained unchanged at 15% of global turnover in the 2022 survey. Turnover of foreign exchange options accounted for 4% of global turnover, and that of currency swaps for 2%. The latter typically have longer maturities than foreign exchange swaps or outright forwards, and thus lower turnover. The instruments covered in the foreign exchange turnover part of the survey are defined as follows. Spot transactions. These are single outright transactions involving the exchange of two currencies at a rate agreed on the date of the contract for value or delivery, that is cash settlement, within 2 business days. Outright forwards. These are transactions involving the exchange of 2 currencies at a rate agreed on the date of the contract for value or delivery, that is cash settlement, at some time in the future, more than 2 business days later. Foreign exchange swaps. These are transactions involving the actual exchange of 2 currencies, that is principal amount only, on a specific date at a rate agreed at the time of the conclusion of the contract, that is the short leg, and a reverse exchange of the same 2 currencies at a date further in the future at a rate that is generally different from the rate applied to the short leg, agreed at the time of the contract, that is the long leg. Both spot forward and forward swaps are included. Currency swaps. These are contracts which commit 2 counterparties to exchange streams of interest payments in different currencies for an agreed period of time and or to exchange principal amounts in different currencies at a pre-agreed exchange rate at maturity. Over-the-counter options. These are option contracts that give the right to buy or sell a currency with another currency at a specified exchange rate during a specified period. Other products. Other derivative products are instruments where decomposition into individual plain vanilla instruments such as forwards, swaps, or options is impractical or impossible. 3. Turnover by currency and currency pairs. The US dollar remained the world's dominant vehicle currency. It was on one side of 88% of all trades in April 2022, unchanged from the previous survey. The next 3 most traded currencies, the euro, the Japanese yen, and the pound sterling, retained their relative rankings. The Chinese renminbi exhibited the biggest increase in market share since the 2019 survey, being on one side of 7% of all trades in 2022, up from 4% in 2019. As a result, the renminbi became the 5th most traded currency, up from 8th place 3 years ago. Some other currencies saw also relatively large changes in market share. While the Hong Kong dollar remained the 9th most traded currency, its share in global foreign exchange turnover decreased from 3.5% in 2019 to 2.6% in 2022. By contrast, the shares for the Canadian dollar and the Singapore dollar increased noticeably. 4. Geographical distribution of turnover. Foreign exchange trading continues to be concentrated in major financial centers. In April 2022, sales desks in 5 locations, the United Kingdom, the United States, Singapore, Hong Kong Special Administrative Region, and Japan, intermediated 78% of all foreign exchange trading. The United Kingdom remained the most important foreign exchange trading location globally, with 38% of global turnover, from 43% in 2019. While the rankings of the major trading centers remained unchanged since the 2019 survey, there were changes in their relative shares in global turnover. The share of trading reported by the United States increased from 17% to 19%. The growth of activity among the leading Asian financial centers diverged. Turnover in Singapore grew at a higher rate than the global total, while that in Singapore and Japan grew more slowly. Turnover in Singapore thus rose to 9% of global turnover in 2022 from 8% in 2019, while that in Hong Kong declined to 7% from 8% and that in Japan to 4% from 5%. The share of cross-border trading in total foreign exchange turnover was 62% in April 2022, up from 56% in 2019 and closer to the 65% share in 2016. Among reporting dealers, more specifically, the bulk, 68%, of the $3.5 trillion per day in interdealer trading was cross-border.